Folks, something has changed with these luxury homes. I'll explain what that is and then get into the latest home prices and insights for York Region for week ending in January 7th, 2026. If you want to speak directly with me about your real estate situation, selling, buying, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. This show, we're focused on York Region, specifically detached properties across Vaughan, Richmond Hill, and Markham. And if you spend any time watching this show last year, many weeks you would have heard me announce that of the properties that are listed, 30, 40, 50% of the listings are listed at $2 million or more. And for a lot of people, when you hear the word luxury, right away, price point is what comes to mind. The more expensive properties are the more luxurious properties. And there are whole subdivisions of properties that are 4,000, 5,000 square feet or larger that leading up to peak pricing days, man, these properties were selling for $2 million, $3 million, $4 million or more, some of them. They were in a subdivision. Many of them from the outside kind of look similar, and a lot of the features inside were very similar because they were mass produced. But buyers widely accepted these as luxury homes, and there was a lot of, I could say a lot of great features with these homes, but they were massive. Fast forward to today when we're way past the peak and we've had several years now of seeing the results of price depreciation. I can say, because we see it out there, we see the data, and we've experienced this with our own clients. It's these luxurious properties, what was labeled as luxury, in these subdivisions that are some of the properties that have taken the biggest hit price-wise. Now, we've seen price depreciation across all home types, across all neighborhoods, across everywhere the GTA. But specifically, this property type has taken the biggest hit. Now, if you're a buyer and you're looking for this type of home, today, what you're going to see is several of these for sale in that subdivision. And if you go see these homes, here's what you're going to experience. They're going to be big, massive 10, 11, 12-foot ceilings. They're going to, lots of square footage. Some of them have been slightly customized on the inside. Maybe they finished and put a big, beautiful basement in there. Maybe they've ripped out the builder kitchen and put in their own beautiful, massive custom kitchen. So you'll see those features in some of these homes, but some of them haven't been touched from the way they were bought from the builder. So they're big, but they kind of, once you start going into a few of these, they kind of start looking the same, especially from the outside. Many people haven't customized the outside. It's not like they changed the brick or the stone. It's not something that most people do to these subdivision type homes. So they'll look the same. And the more they look the same, that's one of the reasons buyers are putting less value. And the fact that there's many of them for sale also brings down the value. If the buyer doesn't buy this one, he'll buy that one. And if you can't negotiate their price on this one, no problem. We'll negotiate with the next seller, and there's plenty to choose from. But there's another classification of a luxurious home that did a much better job of retaining its price. It did have price depreciation still, but not as much as these subdivision type homes. So if we're looking at a subdivision type home, let's say it's 4,000 square feet, and we go to this other classification where this other luxury home, I'll call it more of a traditional luxury home, because before these massive subdivisions were built with these homes, if you were to say, I live in a luxury home, most likely it was in an exclusive neighborhood. Most likely that home was custom made. And if you're looking around the street, you're not going to see another home like it. And everything on the inside was also custom. So even if there's more than one home for sale in this exclusive neighborhood, there could be 5 for sale. You're going to see 5 different homes. None of them look the same from the outside. And when you're looking at the inside, they've all been customized and made differently right from the very beginning, versus the subdivision where it's more of a factory. So it's that other luxury home that really does a better job of retaining its value. Still has price depreciation. Every home type has experienced that, but not as much. It's the subdivision luxurious home where things have changed. During the peak pricing and the run up where we saw a lot of, for many years, price appreciation, it was widely accepted that these luxury homes, there's the value, the price is there, and buyers were outbidding themselves to pay more and more. Now it's the reverse. Buyers that are looking to buy are putting more value on the custom non-subdivision luxury home, and they're putting less value on the subdivision luxury home. The buyer's mentality has changed towards the subdivision luxury home. If you feel this video can help somebody you know, please pass it along. And if you get value from what we're talking about, subscribe. Now, let's get into the numbers. Here we go, folks. The first market report for 2026. We're going to start off with a look back over 5 years. So this is for the data of this chart is for all of York Region, but only for detached properties. And highlighted in black is every December going back to December 2021. Let's look at sales. We finished the year off with 356 detached properties being sold across York Region just for the month of December. And if we compare this December to last year, we're actually up in sales. Not by a lot. The previous year, we sold 324 detached properties in December. This past December was 356. So we're up by a few sales there. We're also up from 2023, much higher versus 2022. We're much lower than 2021. So December overall, we've had the best December as far as sales go over the past 3 years. When we look at the year, however, it's a different story. So it depends which data point you're interested in. If you look at December, hey, sales are up. If you look at the year, 2025 versus 2024, sales are down 9.1%. I will go on record of saying it's interesting to look at year over year, but especially if you are transacting or looking to transact, sell or buy, the most important data is what trend are we on right now? What is the most relevant data? And it's great to say, look, sales are down 9.1% 2025 versus 2024. But the actual month of December was better than the previous December. And where are we headed going from there? Let's look at average sold price. For December 2025, average sold price is 563. And when we go back and look at each December going back, sales, pretty clear, or not sales, sorry, average sold price, it's very clear that it's been trending down. This current December average sold price is 4.9%, so 5% lower than the previous December. Now, the previous 2 Decembers were pretty close, off by $1 each. And actually, the previous 3 Decembers, pretty close. But overall, we're currently sitting at 5% lower. But if you look at the other months, kind of in between, overall, average sold price has been trending down. When we look at more closely the data that is a bit more relevant, still only focused on detached properties, we're looking at Vaughan right now. For week ending January 7th, 9 detached properties sold. Now, I should say the data for the last couple weeks of the year and the first couple of weeks of this year, the data I have on the board here is very accurate, but it's not so relevant as to the actual state of the market. At the end of the year, the market, we'll say, was going to sleep. Right now, it's just starting to wake up. We don't really know for sure the true position. We know what happened over the fall period, and we could use that to gauge. But the actual numbers don't put too much relevance on what's happening right now with actual average price, months of inventory, etc. So 9 sales were done, not a big sampling. Average sold prices way down here, under 1.4. Remember what I just said though, but let's kind of look at overall. For 2025 in Vaughan, average sold price was hovering at the beginning of the year, headed into spring, between 1.6.5 to 1.7. And I'm just kind of looking at not a specific week, but overall, 1.6.5 to 1.7. The fall market kind of finished off with 1.5.5 to 1.6. So overall, through the course of the year, average sold price on average has come down around $100,000. You've got your properties that are priced, say, around $1 million, 1.2. Those came down a bit. But it's the much more expensive homes that have come down much more. 100,000 is average. Compared to last year, doesn't really matter. You get these charts all over the place. Current average price is 13% lower than how we started the year a year ago. But not that relevant. Median price also 1,394 is the average. 1,330 is the median price. Here's something that is interesting. So 9 properties sold. No properties sold at list price or more. That means of those 9, all of them sold below list price. And when we look at that, on average, the sale prices were 5.6% lower than the list price. 5.6% equates to $82,000 below list price. That's just for the 9 sales. But still, of those 9 sales, on average, they sold $82,000 below list price. Listings, we expect to see listings jump up. The stat to really pay attention to, if we're comparing one year to the next, we are starting this year off with 47% more properties on the market than we did a year ago. So we're starting off with a lot more properties for sale. That's significant, especially when we're trying to estimate where our sale price is going. And months of inventory, look, it's way up there. I would say we ended the year off for December in the low 6s, high 5 months of inventory. This is not a true indication of where the market is. Let's look at Richmond Hill. Richmond Hill, often has a very low sampling when it comes to sales. So oftentimes what I'm saying now, as far as the last couple of weeks, don't take the numbers so serious. There's oftentimes Richmond Hill during a week or during a year is like that. But 4 were sold. If we look at the year, we kind of started the year hovering between $1.9 and $2 million for average sold price. For the fall, we're somewhere between 1,750 to 1.8 million as an average sold price. So overall, with all its peaks and valleys and everything that's happened in Richmond Hill, it looks like average sold prices for detached properties are on average about $150,000 lower than when they started the year off. The current average price of 1,879 is 22% higher. Again, the median price 25% higher, but remember what I said first week? Let's look at this stat. Only 4 sold. 1 of those sold at list price or more. So the other 3 that we'll say were priced traditionally, they sold on average 7.4% below list price. I know it's only 3 properties, but they sold 7.4% below list, which equates to $159,000 below list price on average. Some might have been $50,000 below. Some might have been $200,000 below. 40 were listed. There are currently, when we're starting this year off, we're starting off with more than 34% more properties available for sale than when we started last year. And months of inventory sitting at 19, but it's probably really not where it's actually at. Here's Markham. Our first week of 2026, 7 detached properties were sold, none sold at $2 million. The current average sold price is $1,469. Started the year around $1.7 million. Finished the year around, and I don't mean finish, but over the fall market, November, December, the average sold price was hovering around $1.575, down about $125,000 over the course of the year. 1,469 is 12% lower than the same week a year ago. The median price of 1,415 is 10% lower. 7 were sold. 1 sold at list price or more. So the remaining 6 that were priced more traditionally, they sold on average 5.4% lower than list price. And that 5.4% on average is $86,000 below list price. 39 were listed. As far as active listing goes, we're starting the year off with 17% more listings. Now, 17% more properties for sale, 17% is significant. But we got other areas at 30, 40, 50% more listings this year than last year, more active listings. Months of inventory sitting at 8.1. I've said enough on how you take the data first week of the new year. So here's a summary. These are the accurate months of inventory. I don't know how, I know they're not that relevant though as to where the market is actually at. And in the coming weeks, we will see more relevant data that you could basically start to base some decisions on or get a better understanding where the market is actually at. Thanks for watching. Have a great day.